Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the medium time frame bullish scenario where we're looking for a 5-wave structure to the upside, where for a wave 5 the high preferably is made either below or above 50k because of market psychology. If the high would be made below 50k, then people are going to miss out on shorting as they're maybe looking for that 50k psychological number and therefore have to add while price is moving to the downside. And if we move above 50k, then people shorting 50k might get stopped over here. People get greedy, looking for all-time highs, creating liquidity that bigger positions need to then move price towards the downside. Now for a wave 4, we are looking for price to find support in this green area over here. The fibs are taken from the low of 2 to the high of 3 between 35.3k and 40.3k. You can see the 0.236 has already been hit. The most common target area for a wave 4, however, is between the 302 and the 05, between 37.6 and 35.3k. If price would move to the downside like this and hit the 0.618, a wave 4 is invalidated with the 0.618 sitting at 33.1k. If we then look at scenarios that could lead to more downside for this bigger wave 4, then here we are looking for an ABC or a WXY for lower prices, after which we then expect a bounce towards the upside to start a wave 5. Invalidation of both of these scenarios is price taking this high at 44.7k. Now, the difference is that in a WXY, we're looking for a 3, 3, and then a 3-wave structure, within W a flat and then an ABC, complex X, and then eventually a wave Y. And because a wave W is then a flat structure, wave Y can either be a zigzag, 535, can also be a flat, or it can be a triangle, so we have to be patient and see what we get. And in an ABC, we're looking for a 5-wave structure, complex B, and then another 5-wave move to the downside, where we do have some interesting support for both the wave Y and the wave C to the downside here. First of all, the golden box between 38.6k and 39k, and then you see a couple of blue boxes here sitting between 36.3k and 37.7k for some additional support, and then a bounce towards the upside to look for a wave 5. Now what you can also see is that this wave B or X is not on top of this high over here. So in this case, still expecting either higher or a continuation of the range. And the reason is this 0.618 touch on the lower time frame. So on the 15-minute here, we have this high and price moved to the downside. And if we're looking for an impulse to the downside in, let's say, a wave C, which is an impulse by itself, 1, 2, 3, 4, 5, of course, then what we want to see is a wave 4 and a wave 5, but we never got a 4 and a 5 to the downside. And the reason I was then looking for a 4 and a 5 is because of the volume. If we look at the volume here, we could count this as a 1, 2, 3, highest volume over here in wave 3, which is what you like to see. But then you'd be looking for another wave 4 and another wave 5, where you want to see wave 5 made on lower volume. But for a wave 4, price retraced too high. It hit the 0.618, taken from the high of 2 to the low of 3, which invalidates this as an impulsive structure, increases probabilities. This is a 3-wave structure, and therefore it increases probabilities to either take the high over here first at 43.5k, or at least continue ranging, and then we get more information and we can assess the probabilities if we get that more information, right? 2 more reasons why I didn't put the end of wave B or X over here in this low time frame scenario, where we are then looking for a bigger 3-wave structure, is because of the subdegree count of B or X, basically the price action that we have over here. It is very difficult to end a structure over here nicely. If we look at a WXY from this low, WX, and then a wave Y with W zigzag, X difficult, and then we have a wave Y in a flat, then a minimum target for wave Y would be the 0.618, which, as you can see, has not been hit. It's sitting at 43.6, 43.7k, but price didn't reach that area. Most commonly a wave Y goes to the 1 to the 1.236, but the 0.618 is also common but not yet hit, so it lowers the probabilities of this scenario. And if you look at this range over here as an A, B, C, and then a flat, 3 wave A, complex B, and then a wave C, then first of all, wave B on my chart here did not hit the 0.9 Fibonacci, which for a flat is a minimum requirement, and wave C over here did not hit the high of A. It didn't take the high of A. We actually have a double top here on my chart, which then means you have a running flat. And for a running flat, first of all, wave B not hitting the 0.9 is incredibly rare for a flat because it's a minimum requirement. And then also a wave C not taking the high of A, creating a running flat, is also the most rare flat pattern. So that lowers the probabilities, which then kind of leaves a potential triangle scenario where you then have a wave A, B, C, potentially D is in or not yet, and then a wave E, and then a move to the downside. But if we look for a triangle, then preferably I like to see bearish CVD divergences between C and E. That if we do get the high of an E, I like to see bearish CVDs showing that there is weakness, showing that there is absorption of market longs by bigger limit short positions to push price to the downside. So this is at the moment at least an idea at the moment, but that likely means that we are going to continue ranging here for a while first. In a more bullish scenario, we are looking for price to take the highs over here at 43.5k before then a move to the downside. So in this scenario, for a wave B and then a bigger flat position or scenario in an A, B, and then a wave C, the most common target for B is between the 1.38 and the 1.236, which is between 46.3k and 45.6k, after which we then expect an impulse to the downside in a wave C. And for a wave X, the target over here inside this range is then the 786 to the 886, as we then still look for these highs to be taken, which for a wave X is still a common target. But if wave X can move above this blue resistance area, then we're also going to move towards the golden area also for this wave X, because a wave X can also move above the origin of wave W. Now you can see these fibs do match with additional resistance. The blue box here between 43.5, 44k, and a golden box between 45.2 and 46k, after which we then expect still a move towards the downside. So you can see that in all of the scenarios we are looking for eventually the lows to be taken. If we then finally zoom out once more and look at the medium time frame bearish scenario, then we are looking at a finished 5-wave structure and the beginning of a much bigger correction to the downside, at the moment an alternative. If you look at the CVD divergences locally, then we had a move to the upside. It took a while. This was throughout the night for me. Took a while over here to get a bit of a range, and eventually we build bullish CVD divergences. These bullish CVD divergences played out as price moved to the upside. Also got some bearish CVD over here, also played out as this low was taken here, so that's very nice indeed. So both of these played out. Now we have neutral CVD divergences, so we need to wait and see what price is going to give us today. If we then look at the probabilities of the different scenarios, then on the medium time frame, we are looking for the bullish scenario, where we're then in a wave 4, still looking for a move to the upside in a wave 5. On the low time frame, we are generally still looking for new lows with all of the scenarios. If the double top gets taken first, we're still looking for a move towards the lows, and then either a WXY scenario, or we're looking for a bigger ABC scenario. And if the lows get taken first, we're still looking for a move towards the highs. On the micro, however, when we look locally, the 0.618 has been hit as shown over here. Instead of this being a 5-wave structure, it's now more like a 3-wave structure. 0.618 hit, increasing probabilities to take the double top over here, or at least continue ranging, which helps us to assess the probabilities at a later stage. And only in a triangle will the highs not get taken at the moment, but then I want to see bearish CVD divergences between C and E, not D and E, but between C and then a wave E. Right, so that is something we have to wait for as well, because a triangle means a continuation of this range. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.